All right, everybody. So weekly watch list for the week of March 24th. Shout out to everybody tapping in. And if you're watching this on YouTube, definitely subscribe to the channel. We're gonna do this every week. So start here on DXY. I always come to DXY because typically the markets, like as in NASDAQ, ES is synonymous with the SP 500, right? So the NASDAQ, the SP 500, they move inversely with the dollar a lot of the time. It's not super directly inversely, right? It's not penny for penny, but generally, if the dollar is going up, you tend to see stocks trading down generally. So anytime I see the dollar rising and stocks are also rising, somebody's lying. Like your antennas got to go up. Like, hold on, something not right. And so, really, that's kind of what I've been seeing here a little bit in the market. Like, this doesn't happen often where I notice that the Nasdaq is going up, for example, and the dollar is going up simultaneously. And that's what's been going on. So last week on the last week's watch list, our draw for the dollar was to come into these highs. I understand, and I always talk to y'all about how price, even though people talk about liquidity a lot, people think liquidity means you always have to run above these wicks, and it's like not. A lot of times, price may just target the highest body on a swing high, or it may just target the lowest body on a swing low. So I sent this to the chat that day it happened, which was Wednesday, day of FOMC. On FOMC, we drew into the highest body. Price touched it and immediately dropped the heck off all the way down. But then right after that, what did it tap into? This very same fair value gap that told us to keep our eye on. My foot. I was telling you about eye on this one, and this will tell us everything we need to know about what the dollar will do. So actually, initially, based on this rejection, I said, hey, maybe price wants to ignore this fair value gap and come to the downside. So I was kind of at an in-between spot. As I told my mentees the day I had class this day, I was like, we may either use this to go higher and then we'll actually run out these highs, or obviously if we trade through it, then we will be expecting us to run out these lows. And you see what happened. We came right by the halfway mark of it, and then ran through our official weekly target was to run over these highs. And I'm looking for a continuation to the upside. I personally, that's bullish to me. In this scenario, I talk about this in my mentorship. This scenario is really a bullish scenario based on the way that the fair value gaps have formed in this manner. So we're seeing a lot of bullish things come out of the dollar. Not only was the formation bullish, but the way that we used the actual bullish fair value gap was bullish. It makes sense, right? So then now we pushing up. Now I want to see if we can create yet another bullish fair value gap. So I would like to see if this candle that just opened up on futures 42 minutes ago, I would like to see if this candle will trade down and touch the high of Thursday's candle. So we'll keep our eye on that on the dollar to see if we come down and touch the high of Thursday. Why? Because that would eliminate the ability to create another daily fair value gap. So we'll keep our eye on that. If we make another one, that's really, really bullish. You know, why is it bullish? Because price is not only forming fair value gaps, but it's tapping into it and then what? Creating more. That's what real uptrends tend to look like. You'll see those type of things occur in uptrends. So here we are. Let's continue to push. I don't really see anything to the left that should be sending price back to the downside. So my draw is coming back over these highs. So on DXY, I'm bullish. And let me tap in with my Forex people for just a second, because we on the dollar anyways. So it's not much to say on Forex that I didn't say last week. We just want to see continued delivery. The only thing that really changed, I would say, is Euro JPY. So here on Euro JPY, we wanted to see price come to the yellow line. What happened last week? We seen it draw way past the yellow line. Good job, target hit. Now we want to see what price wants to do next. And so for me, I'm looking to see if price can hold the upper portion of this daily bullish fair value gap right here and continue higher. That's what I want to see here on Euro JPY. I don't want to see it come to the lower parts of this, because then if price comes to the lower parts of this, I might end up seeing I might look to see if we want to go and run these lows next. So a lot depends on kind of how we handle this. It doesn't mean that if we lose the upper half, we automatically are going to lows. No, because we could use the lower half. I'm just talking about likelihood. But in general, what I will say is if we don't use this overall purple area at least, then it's more likely that we're gonna end up running out these lows. And this will look like we well, not really, like I wouldn't even say this is a sweep. We just simply met our target, and now it's time to go bearish. So big eyes on this daily bullish for value gap here. Carl said the volume is low on my mic. Does anybody else feel that way? So just let me know in the chat, and I'll see if I can make an adjustment. Just want to make sure it's not just Carl's side, but let me know as I continue. Okay, cool. So yeah, internet said it seems normal. Sounds fine to me. Okay. Thank y'all for the feedback. Yeah, Carl, just make sure your volume is as high as possible, or maybe like leave and then rejoin the Zoom. Maybe it's just a little malfunction. So just check that out. So yeah, thank y'all for the feedback though, for real. So let's see, GBP, which is British Pound US Dollar. So based on this one, ladies and gentlemen, based on this one, we want to see continuation to the downside. We've gotten delivery there so far. I still expect more continuation to the downside. And that coincides with the dollar, right? We talk about the dollar, we want a bullish draw on it. So if the dollar is bullish, you would expect British pound to be bearish. And so I like when they're in alignment, just like it is right here. Same thing in New Zealand dollar. This was based on last week's watch list. As you see, the arrow is right here. This is what I talked about last week. And we ended up continuing drawing to the downside. So I'm expecting further delivery to the downside here. What I would like to see specifically, by the way, is I would like for us to not touch, I would like for us to create a bearish for value gap right here. So we're going to keep an eye on today's candle. So I would like to see just strictly continuation to the downside from here. And all good, Carl. Copy though. I'll try to maybe talk a little louder, I guess. Maybe some people are having a little volume issues. Could be me. So USD CAD. USD CAD is the last forest ticker I'll go over. We wanted to see it draw higher. We wanted to run over these highs. We currently got it so far. And we want to see even more continuation. So I'm bullish on USD CAD as well. So Forex is pretty much looking exactly how we expected it to look last week. That's what we talked about. And so everything is delivering, and I'm actually expecting continuation on everything I said. Except the only one we have to keep our eye on, like I said, was that Euro JPY. We want to see what we do with this. But other than that, yeah. So now let's move over to NASDAQ and ES. Before I get to NASDAQ and ES, what we got to do, time and price, right? So this week's major U.S. economic reports, make sure that you keep your eye on the news. Why? News doesn't tell us direction on price. We know where price is going without the news. News does not affect the direction on price, but it tells us when we're going to head in that direction. So you want to know when are the high impact news drivers. That way you know when to actually get involved in the markets. So here, what we see on Monday is nothing really that I'm concerned with here. So what can I expect on Monday? Plus it's Monday itself, which is typically chop. I'm expecting chop. I'm expecting chop on Monday. I don't expect too much to come out the market. There's not really anything to drive the market like that. Couple Fed speakers, which usually brings chop to the market, and it's nothing, no crazy news drivers. Same thing here on Tuesday. Besides, consumer confidence is decent, but it ain't nothing too crazy. Fed speak on Wednesday. So really the beginning of the week to me is just looking dry. This market has been dry recently. And unfortunately, I don't feel like we're going to get too much out of the first few days of the week. Now, coming in here into Thursday, we get GDP second revisions. Maybe might do something to the market. Consumer sentiment, decent. Thursday could be a decent day. Friday is where we have PCE. So it seems that Friday is a day with the best news driver. PCE is a great inflation gauge for the Fed. And we closed on Friday. Lady Keller said we closed on Friday. I did not know that. Why is the market closing on Friday? Oh, is it Easter? That why? Good Friday. Yeah. Okay. Yeah, well, market the day with the news driver, the market is closed. So there's that. And so we got a holiday week in itself. I ain't gonna lie, y'all. I don't expect too much out of this week. So definitely trade carefully. So with that in mind, let's go back to the charts. We got to trade careful this week. Let's go back to the charts. So here on ES, it's really going to be this simple, y'all. We're either going to use this to go higher, or if this fails, then we're going to make a big move down. That's my current analysis on ES. If we don't use this fair value gap to go higher, and this one here, the place where I really needed to go higher from, of course it could just go higher off the top part of it, yes. But my expectation is actually that we trade to the lower end of this fair value gap. And if we trade to the lower end of this, I would like to see us trade higher off of that. If we don't, then I believe that price will make a move, a pretty strong move to the downside. But just be careful of this type of week. right? We talked about the news drivers this week, plus it's a holiday. Be careful of something like that occurring in the market, or something like this happening too. It might could use it at first, go higher at first, but then kind of come down, and the weeks could just look very uneventful like this. So I want y'all to really be careful. When there's no news drivers, my expectations are always low. But no matter what, everything is based on this. So in this area, for me to really believe that we are going to continue to the upside, what I want to see, I want to see if we could create a 4-hour bullish fair value gap and respect it. So not just create it, but also respect it. And why do I say that? Well, I want to see also respect it because it'll tell me that we're kind of out of this range and out of the chop that we've been seeing. So let's kind of look at this. This is how you know that you're in chop. It's a bullish fair value gap. That's what a BTSMC is for real. That's how you know that you're in chop. If you see let's say something you like to take sells off of. So I'm not going to talk about the probability based on fair value gaps in here right now. Like that's something for a different day, but I'm just, making a point off of this. Let's say that this fair value gap is one that you thought price would reject on. You're like, yo, I like this fair value gap. Price could reject here. Price comes into it, doesn't reject. Yeah, like, what the heck? All right, it's cool. That's probably could be bullish now. All right, bet. It's lit. Let's take some calls. Let's take some buys on futures. It's lit. Oh, look, and we made a bullish fair value gap. Bet. Let's go. Let's use this instead. Let's erase this and use this one. What did price do when we got there? Did it use it? Heck no. Trade it right through that joint. That signifies that we're in a range. We're in a range. And so therefore, things that you expect price to go higher on, not working. The things you expect price to go lower on, also not working. You're in a range, and the best trades will come outside of that range. Honestly, like this, low key. Look, this is the range. Let's put a rectangle around it. We have our range right here. Look where the best trades came from, outside of that range. So let me erase this so you don't get confused. Wasn't the best trades outside of the range? See what I'm saying? So we don't even trade in the range because everything becomes low probability in there. And so here's the biggest mistake. And I feel like low-key a part of this watch list, we should almost just touch on a little psychology for a second. Can I talk psychology for a second? Because a lot of people are losing confidence in the market. I can see it throughout different discords I'm in, different communities, and social media. I'm like, yo, people are losing confidence in the market because this is what the market been looking like. Let's go to NASDAQ. It's even clearer here. I'll talk about my analysis of NASDAQ in a second, but can we acknowledge, y'all, together, the fact that we've been in a range for basically 2 months straight, right? So right now, everybody's like, dang, man, I don't understand why I'm losing money in the stock market. Like every time I place a trade, it's not working. You never zoomed out and seen that you traded in chop. You're trading in chop on the higher time frame. Price is fractal, my people. So I understand the fact that we could chop on a 1 minute, we could chop on a 5. There's chop on every time frame, right? But we forget the fact that you could chop on a higher time frame. So the market caters to different people at different times. So peep this. I know y'all look at the range. All right, now let's zoom out for another second. Hold on. Look what came right before that. Ain't that beautiful? Sheesh. That's gorgeous. I ain't gonna lie. This excites me. I always say, man, certain times these charts excite me more than women. I ain't gonna front. Like, I'm just saying, these charts right here, these is the ones. So when I see a chart like this, I don't know how to act. This is that trend, you know what I'm saying? But guess what, my people? Guess what? You gotta live to trade the trend. You lost your account in this, not understanding that this type of price action comes back. It doesn't. You think this is the last time you're ever gonna have an uptrend like this? No, it comes back. But the market can't do this forever. So here's the intent on market makers, etc., etc. Yeah, everybody can eat with you, and guess what? When they're gonna take their money back, they're gonna take their money back in this, because they know we undisciplined traders. We're gonna be in here full port and all types of nasty stuff and unprobable or low probability price action. And to everything you made in the trend, you give back in the chop. And guess what? When it's time to trend again, you ain't got no more money. You got no more money. So as prices up here doing this again, guess what? Y'all gonna be sitting on the sidelines like, oh, y'all probably gave up on trading. Some of y'all about to give up on trading because y'all don't know how to, be disciplined and chop, and you're gonna blame yourself, losing all confidence in yourself when it's like, I don't care how nice you are, it's gonna be hard to be consistent in inconsistent delivery. How can you be consistent in inconsistency? So please, like, lower your expectations, lower your leverage inside of this until we break the range and show a true break of the range. When you start seeing highly probable bullish things get respected, or slash and highly probable bearish things get respected and continuation, then you'll know, okay, it's ready. The market is ready to move again. The market is going in 3 phases at what time? We're either going up, down, or sideways. All right, we're either expanding, reversing, or contracting, or in consolidation rather, right? So that's the market is doing at all time. We just talked about an expansion stage here, right? We just seen beautiful trend. Even when we retraced, it was a nice retracement. Look at this. These 6 days of red was gorgeous, and then we went right back to the other side, continue, and then we entered this nonsense. Okay, so please, y'all, like lower your expectations a little bit and wait till you break the trend, because even me here doing a watch list, when I'm looking at analysis, I'm like, this is me trying to analyze chop. And so I could say if we're indeed bullish, yeah, if we are indeed bullish, we will be, let me talk NASDAQ as I say this point. If we're indeed bullish here on NASDAQ, we're expected to use the upper half of this to drive higher. We tapped into it on Friday, yes, and this should drive us higher if we're indeed bullish. I'm giving room for the whole upper half of this. But if we start coming to the lower half of this, my eyes would think that we're going to make a nice downtrend. That's why I have 2 arrows drawn here, because they're both highly probable. So it's all about what we do with this. So guess what we need to execute while we're inside of the range? What we need to execute is patience. Let price talk to you. I'm trying to tell y'all prices. Let me just tell you a little something about pricing. Y'all might see why I prefer these candles to women these days. Like, it's like price will talk to you. Price will whisper in your ear, like they be whispering sweet nothings in your ear. Like price will tell you, like, yo, I'm bullish for real. It sound good. It sound good. You gotta listen to price. Y'all talking too much. Y'all doing too much. Y'all gotta listen to what price is telling you. Understand? Let price talk to you. It'll tell you what's really going on in the market. Understand? So we don't force the issue in here. You doing too much talking. Let price talk to you instead. Take trades outside of the range. Inside of the range is low probability. Does that? Okay, so let's see probabilities. On a daily being chop, on a daily being consolidation. On a daily consolidation. Cool. On a 4 hour, you see the movements are a little more like, up and down, right? So you can see there's trades to make, but ultimately, where do we really go? We didn't go anywhere. Even with FOMC, we didn't really go anywhere for real. All right, now let's go down to the 5 minute. Let's go down to 5 minute. This looks nice. This looks nice. Shoot, this looks nice. So what's my point here? Just because we're chopping on a higher time frame doesn't mean you can't take day trades. So I know the daily is in chop. That doesn't mean the 5 minute has to be in chop at all times. So yes, there are day trades you could make, but if you base your day trade, if you base your day trades off of higher time frame points of interest, I hope I'm not going over certain people's head. I know I got different experienced people in the room. So let's use an example. Let's use an example, man. Let's do this. I personally would never use this type of a fair value gap to take a trade on. Personally, I would never use this fair value gap. So let's get that clear. I don't use every fair value gap. Most fair value gaps in the stock market are going to lose you money. You need to learn the skill of knowing which ones are highly probable. All right, but I'm gonna call this a bearish fair value gap for you. Let's turn it red real quick. And then let's take a play off it. So let's say my analysis today is, I want to take puts when we come to this bearish fair value gap. Okay, copy. So let's see if we can get up there. Remember, where did I get that bearish fair value gap from? What time frame was that? What time? That was the 4 hour, right? So let's see if I can get us to tap into it. Hold on. I think it goes there eventually, don't it? All right, cool. So we got up in here now. Let's see, look at the 5 minute. Okay, first of all, you could have caught at least somewhat of a trade in here, right? You can see there was some trade to take. You could have took the sweep entry and took the downside. But what I'm saying is, if you were the type of person that wanted to take even a swing trade out of this, or it's low probability. So I know it might have worked at first, but then I think price eventually trades above it and invalidates it. So it's like, I know you see the little reaction. So money was made. Yes, I understand that. But I'm just saying, if your idea was to take that to bring you to these lows, because typically you would want to come back to what? The recent low. So that's always the first target. So coming from here, you will want to deliver here. Guess what? Your PT never got hit, people. And you're using a higher time frame point of interest. So I got this from the 4-hour. A 4-hour bearish value gap should at least send me back to the 4-hour lows. So I'm basing my trade off the 4-hour, but guess what? Didn't I say on the 4-hour we're in chop? So you see why I say like everything becomes lower probability, because even though the 5-minute you could catch trades off of a 4-hour point of interest, if we're chopping on the 4-hour, it will actually throw off your 5-minute trades. I try my best to explain that. Please put ones in the chat if you know what I'm trying to say. Please put twos if you don't understand what I'm trying to say. I just want to make sure y'all on the same page with me. I just want to make sure y'all understand what I'm trying to say. Okay. I got a lot of ones. I got a couple twos. Okay. I appreciate y'all responses, y'all feedback. So a lot of ones, couple twos. All I'm saying, I wouldn't even say, but I'm not really trying to say like, yo, don't hold too long. No, my point here is to say that when we're in chop on a higher time frame, even the lower time frames get thrown off, because especially me, I'm somebody that tends to take higher time frame points of interest, such as a bearish value gap from the 4-hour. Because I'm getting in up here, I enter on the 15-second time frame. I enter on the 1-minute time frame, the 15-second, and I would still be taking it to a 4-hour low. Now, I want to be very clear here, super clear here. Don't think that I'm saying this, because I got to disclaim this. I know not everybody's used to me. I got to disclaim this. Just because we touch the 4-hour area, that don't mean I'm looking at the 15-second right away. Can I be very clear with that? That's not what I'm trying to say. I'm not having a 4-hour rectangle drawn, and the minute we touch it, I'm on the 15-second. That's not what I'm trying to say. It's not what I'm trying to say. I'm saying that I'm not going to go over my entry strategy, because that's a whole class in itself, right? I'm not about to talk about that. I'm just saying when I am ready to enter, I am entering based on the 15-second time frame. But guess where I'm trying to take price? I'm trying to take price to what? The 4-hour lows. So if I'm getting in here for puts, my goal is to go to the recent 4-hour low. It's really that simple. So, but if the 4 hours in chop, are we going to get to the 4-hour target? Probably not. He probably won't get there this time, because we're in chop. The 4-hour going to end up messing me up. The 4-hour going to end up doing some crap like this. So I know I took a day trade, but I never got to my target because the higher time frame is in chop. So day traders get messed up in higher time frame chop, and guess who else gets messed up in higher time frame chop? Swing traders. And I think that's self-explanatory. I mean, if you're a swing trader, your goal is to, you would enter right here, and you're trying to take it to this yellow line up here. That's your goal. But if we're in a range, how the heck you gonna get up there if we're in a range? How you supposed to? We're not going anywhere. We're in a range. So obviously swing traders is getting killed too. So I think I needed to speak on that, because yeah, I get it. In the chat, somebody said Spa's been taking me to the shredder. So yeah, and another question said, how do you see a fair value gap in a bearish candle? Man, that's a little bit apart from the class. I got you though. Maybe when the watch list is over, I'll answer that question. But I want to stay a little focused here, just because so I want to stay focused. That's literally a class in itself. But I got you. So let's get back to the watch list, but I think it was necessary we talk psychology a little bit, because I mean, guys, look what I'm trying to make a watch list out of. I think it's pretty clear. This 4-hour time frame, you see what we're dealing with. So please be careful in this market right now. It's not favorable. So this is my expectation on NASDAQ. Either this, if we don't use this, we're probably going down. I expect much lower. I'll target these lows. And if we do use this, then yeah, we'll obviously use that and continue higher. I think that's self-explanatory. Absolutely, T.O. Absolutely. All right, so cool. Let's look at the. I don't know if anybody else's trading view is doing this, but my Dow Jones chart is not showing these candles. So when I looked at this earlier, I was like, what are they doing? I don't know what to say about this on the Dow. But I would say the Dow, you can tell, is really rangy. nasty. It's moving up, right? But it's a very disgusting move up. Typically, these type of moves up on any time frame will eventually result in what? A big flush. So when will that big flush happen? We will see. I would kind of need to see what's going on here for me to determine that. But I do believe that downside is coming for this market soon. But I keep my eyes open on other scenarios. So actually, kind of speaking on this on the NASDAQ a little bit, I want you to take a look at NASDAQ like this, right? And then I want you to take a look. So actually, I'll put them side by side. Hold up. Better idea. Let's put them side by side. Let's check out Bitcoin. I know my mentee's seen this demonstration already, but I'm gonna do this for everybody else real quick. Okay, Bitcoin. No, they doing some other stuff. That's some market cap stuff. My fault. I want to do my Bitcoin that wasn't marked up. I think that's because I'm on. There we go. There we go. I bet. Let's look at this, y'all. This is a very important visual for you to see. When a market is extremely strong, I think we all understand that markets can't go up forever, just directly straight line up like that. It kind of has to pull back. And what have you heard as an analogy when we say markets pull back? We tend to say, hey, it's like a track runner who be running and needs to take a breather. That's a great way to think about it. I agree. And typically we see breathers as retracements. That's what you expect to see. Like, okay, after a higher high comes a higher low. In an uptrend, what's after a higher low? A higher high. So if that's what we tend to see in uptrends, you're expecting retracements. So let's take it back to NASDAQ for a second. I think it's pretty clear to see we've had a pretty strong uptrend here. But what about time periods like this? Where let's say you've seen this, y'all might remember the bottom at the end of October. Y'all might remember when we rocketed out of those lows. And then we came to a point where we chopped. We chopped for multiple days straight. People tend to think that, oh, we chopping, that means price is going down next. And I understand that level of thinking, right? You might think, okay, since we doing this, we slowed down. Now what comes next? Retracement. Nah, I wouldn't. It's not always like that. Because look, then you have another uptrend. So sometimes when price is super strong, the breather that it takes is sideways movement. Then it just continues to the upside. And other times, the breather that it takes is what? An actual higher low gets created before that very next higher high. All right, so you got to understand both of these are very probable ways for price to breathe. It can just chop and go up again, or it could go up and then actually go down. Right now, we're going sideways again. Our move up is also very ugly. So it's just as possible for price to rocket out of this, just like this, as it is for us to actually go and make a nice downtrend. The reason why I lean towards the downtrend sooner rather than later is strictly, and I say strictly, I mean strictly, because of what we talked about on the dollar, right? I told you, like, the dollar's been bullish. Typically that, like, if the dollar is bullish and NASDAQ is bullish, somebody's lying. And right now, I don't think the dollar is going bullish for no reason. The dollar is showing us great signs on a bullish end. For example, like I said, using this BTSMC to go higher like this, a strong move higher too, that's typically indicative of bullish movement on this dollar. So just based on the fact that the dollar is so strong to me and the NASDAQ has been running for so long, I wouldn't be surprised to see an actual dip in the NASDAQ. So we will keep our eye on that. And I just hope y'all know this is not futures traders. Even when I just trade options alone, guess what I'm charting on? Futures. So I'm talking to my options and my future people at the same time. Whatever I say here applies directly to QQQ. Whatever I say on ES, it applies directly to QQ, to SPY, okay? All right, so yeah, they're both extremely probable. And what I brought up Bitcoin to show y'all was, I'm back on Bitcoin, right? Just to show you guys how they handled their uptrend. So you see they went up. Don't this time period look just like NASDAQ right now? Tell me I'm lying. I want somebody to dare tell me I'm lying. This don't look just like NASDAQ right now, this ugly move up. But what ended up coming after it? Another move up. Price just went strong again. This is a daily time frame. Price just went really strong to the upside again. Then we went sideways. Then we got a dip. See, so both are extremely possible scenarios. But then what happened after that? A super strong uptrend again, and then here we are today. So keep both scenarios in mind. They're both highly, highly probable scenarios. And I hope that's valuable for y'all to see. Now, let's keep it moving.
Zoom user to you. There was a previous FVG you said you wouldn't have used on MNQ. Can you give a rationale for why you didn't like that FVG?
I don't know where that message came from, but I got you. Yo, Zoom has been tweaking lately, reading messages out loud and all of that stuff. I don't know what that's about. But I know what you're talking about. I wouldn't use this where was it at? It was this one, because man, I say this, right? After we sweat buy side like this is not something that I would expect price to use to go lower. And mind you, we had already ran out these lows. So if we coming back, so meaning we met an objective. So we met a buy side objective, traded down hard, left a baby fair value gap, which is not even the type of fair value gap I would want to see left. Also, the formation of it, because there's different types of fair value gaps. This type of fair value gap, the formation of it is not one that's indicative of continuation. So basically seeing price come back to it, I wouldn't want to take puts off of this. Typically, if price come back to this, it's going to run out these highs next. You don't want to see this get revisited. So that's why I was saying, I know this is a bearish fair value gap, yes, but this is not one that I would want to go lower off of. So my thing was a super and a hypothetical, definitely a hypothetical. David said that was a market maker trying to learn secrets. No lie. Zoom gotta chill with that stuff. It be scaring me out of nowhere. I just be getting, they be reading my message, like reading messages out loud. That's only started last week. They gotta get it together. But yeah, yo. So where it's based on, and that I'm so glad you asked that question, because that's an example where I mean where you can't just learn what a fair value gap looks like and think, okay, I can start trading it now. You're gonna get destroyed. You're gonna get destroyed in the market. Destroyed. I promise you. There's so much nuance to fair value gaps, so much nuance to order blocks. People on Order Blocks Masterclass could attest to that. Now y'all see what I'm talking about. There's a lot of nuance to order block and everything else that you use in the market to take plays on. You can't make things so procedural. You have to have a conceptual understanding of these things and understand signatures in a market and market behavior in order to really take advantage. So that's why I always say, a lot of people think they know smart money. They don't. And I'm talking about people on YouTube as well. They don't. Don't think because they have a lot of subscribers, they know what they're talking about. Please don't get it twisted. Anybody could set up a camera, show a fair value gap that worked, and say, look, guys, this fair value gap worked. See, price never closed above it. We ran to these lows. No, good. See, fair value gaps. Now you're like, oh, fair value gaps is a great thing to trade. Good luck. Y'all gonna get clapped. Y'all gonna get destroyed. I'm telling y'all, I'm saying this with love. You don't know what you don't know. Real talk. But don't get me started. I'll go on a rant on that because these YouTube people be killing me. So let's keep it moving. We want to wrestle with it. Last week we wanted to see if we could trade into this yellow line. We fell just short of it, man. Just short of it. Now we're in here. Personally, I would like to see the upper half of this one hold in order to go higher. If not, if we start coming to the lower half of this inefficiency, this fair value gap, if we see the lower half of this, then I think we would end up starting that downtrend. We would definitely start a nice little downtrend. So it's kind of like the market is in a place where everybody's at a crucial point that'll tell us a lot about a lot. Okay. And Zoom user said, so was that one too high for continuation? So what they're referencing is my previous example on NASDAQ. They said, so was that fair value gap too high for continuation? It's not about it being too high necessarily, more than it has to do with objectives that were met versus were not met. So it has to do with price meeting objectives. That's all it's about. So your expectation of fair value gaps a lot of time has to do with objectives. Okay, without saying too much. CL, now this is relative to just oil. Okay, my fault, futures traders. This relative to my futures traders. We talked about last week how we want to see if we could come into these monthly highs. These monthly highs right here. This is the high of this month. So we talk about like targets. CL is another ticker that, just like the rest of the market, has been in a ridiculous consolidation, ridiculous sideways movement. I mean, look at the daily, man. What have we really done for so long now? We've gone nowhere. It's been nasty. The weekly is telling as well. Red, green, red, green. It's looked like Christmas. It's looked like Christmas. So with that being said, we're just trying to find very low-hanging fruit objectives. So we're saying, you know what? We're trading up. Prices potentially attack, looking for these monthly highs right here. So I just took the high of November. That's an easy target that I felt price could trade into. I was saying on last week's watch list. So Monday opened up, we went really bullish. Tuesday bullish, came very close to these monthly highs, didn't quite deliver. If price could deliver to these monthly highs, it would have to use this BTSMC to get there. If this BTSMC fails, then I would have the expectation that we would end up coming towards the downside. Now, I talked to my members about this BTSMC actually has a bear case to it, and it has to do with this candle. BTSMC is a bullish fair value gap, my fault. So it has to do with this candle, okay? Why this BTSMC is very suspect to me. And so I'm keeping my eye on this. I don't have super crazy expectations on price using this to deliver into those monthly highs. I actually almost feel price will not use this and continue to the downside. So we'll keep our eye on this area. If we lose this, then I would expect continuation and just try to take it to maybe the lowest body. We're in a range, right? Y'all know the best times that the lowest body works in ranges, because price ain't really trying to go nowhere. So price will literally go lowest body, highest body, lowest body, highest body, back and forth, because we're in a range. Okay, so yeah, a lot depends on this. I know there's a fair value gap under it. See, there's a fair value gap under it. I'm not saying it's impossible for it to use it, but I would say the likelihood is not to use this to go here. We're so close to this target already. If we come back this low, that means that the objective was not to get to these monthly highs, at least not now. I would think our new objective really would be to trade into these lows. So that's why I say we can use this to go higher, but the one on the bottom, though, I don't know about all that. The one on the bottom, I don't see us using this to go higher. I would see us trading through this. So we would trade through this and tag into those lows. So CL, another waiting game, which depends on what the current fair value gap we're in. So it's just funny how the market is like, it's like the market has left everybody in a place where anything could happen almost. You feel me? It's like we either going super up or super down. Okay. And we went over those. Okay, from here, what I wanted to do is kind of, y'all give me tickets to go over. So from here, I wanted you guys to give me things to go over. We went over like the major indices, so that gives us a lot of direction. Unfortunately, we're in consolidation, so it's not too much direction this week. But now y'all tell me you want to look at. So let's go to AMD. I see the first request is AMD. Let's go there. AMD's. So AMD's had definitely delivered the way we said last week. Last week, what was it? Friday. So last week when we looked at it, it was this green candle. That's where we left off at. And I said that there's a chance AMD could go higher from here, but I don't think it will. If it doesn't go higher from here, then my draw will be running these lows. So far we came to the lowest body, yes, but I would like to see AMD deliver lower. The move down, though, is not exactly necessarily how I like my down moves to look. And it has to do with the staggering into lows. Just look at the two price legs to really kind of get an example of what I mean. Look at the left side. We gapped up. Major green candle. Gapped up again. Big green candle. Gapped up. Like, so you see what this looked like. Now look at this one. Okay, we had a gap down. That's a nice little strong start, but then it looked like Christmas again, right? Green, red, green, red. It's not too much. The only thing I can say is bearish tools that we have, bearish tools that we tend to look at are indeed holding. So an example of, without getting too much in detail, a bearish tool that I see this repelled price. You see this red candle had tapped in and dropped this down. All right, now we kind of looking at this inefficiency in here. You can see this inefficiency here. Price held it to the tick, dropped down, and now we came to these lows. And then we got a green candle. So we're gonna look to see. I think AMD is at a point where I know it could go lower, but the way it's dropping, I wouldn't be surprised to see a major pop out of this area. So unfortunately, AMD is kind of in a spot where I'm not a major fan, but if we get under these weekly lows, it could get bad on AMD to the downside. So the weekly lows of Monday, February 26th, it could get bad on AMD. So I mean, we traded into this weekly inefficiency right here. Objective met. Our downside objective is met. To be honest, our AMD call out started out, isn't it a couple weeks ago or whatever, when we was talking about it. This is a Monday candle. Yup, we talked about it this. I remember this was Friday. So we always talk about this stuff on Sundays. And I was saying AMD, I said if it doesn't use the exact spot it's at, so we were in a bullish tool right here. If price was bullish, it would have bounced right there. I said if it don't bounce here, AMD's coming down into this area. This is a nice move. So anybody who took swings off of what I said, you made a nice move. Downside objective met. Good job. Now, do we want to continue? It depends on what we do in this area. So how do you know if you want to get involved on AMD? What I would say is look for, based on, this is a daily analysis, right? So proof that we're bullish would be 4-hour bullish fair value gaps coming out of this area. If you see the 4-hour show bullish fair values come out of here, that'll tell you a good sign that we're probably going to be bullish come out of there, especially if we respect it. So let's say we make one and use it to go higher again. Oh yeah, price is whispering sweet nothings in your ear, promise you. So watch them fair value gaps from a slightly higher time frame on AMD. All right, American Airlines is the next one I see here. I mean, shoot, this area held price. I don't know what I was charting. This clearly this area ended up holding price to go higher. I wonder what that was though. That's probably something from the weekly. Yeah, I'm dead. That was, oh, I remember this was a weekly draw. I remember telling y'all, mentees, I'm saying, I said, you know, after the sweep, we coming in the head next. So we're actually getting a bounce out of this area right now. We're getting a bounce out of it right now on American Airlines. That's funny. I haven't checked this chart since, but I mean, this looked like trap traders. I'm talking about mentees. It looked like a trap trader situation. The American Airlines looks bullish to me. It looks bullish to me. Let me see the monthly though, for real. Yeah. It looked bullish to me. I expect higher prices on them personally. An objective was indeed met, for sure. Also, if we were truly bearish, y'all, we most likely wouldn't have revisited this if we was truly bearish. So even coming back to this kind of tells me we probably have a upside draw. Things that would invalidate me is simply if we don't use this to go higher. So obviously, if we trade under this bullish fair value gap, then I would say, okay, I'm probably wrong, and American Airlines wants some more downside, but I think that it has more upside. Super confirmation is if we could get a closure over this. If we get a daily closure, I'm talking about over this red wick here, then I would expect continuation, and my next draw would be for price to run out this wick. Yes, you could play it safe, of course. Always play it safe and take the highest body. Look, always play it safe, but I do expect American Airlines to make a continuation to the upside right now. All right, so I'm bullish on them. PayPal is another one that got requested. Let's look at PayPal. Okay. In general, when I'm looking at when I'm looking at tickets, right, I always start from the higher time frame. So on a monthly right now, I'm looking for direction because I want to kind of talk y'all through how I'm viewing this. Obviously, I'm charting on this spot here, right? So I always go to the monthly to give me overall direction on price. Give me what is the monthly drawing into. If the monthly could tell me, let's say, because this ticker right now, I'll say it's not giving me much. But let's say I'm saying, yo, I feel like the monthly wants to target these highs. Imagine if you know for the whole month or for the upcoming weeks that you know that price is truly bullish. So anytime you see a little seller, let's say it's one day, a red day. When you have a red day on a daily chart, you have to just ask yourself, well, the monthly told us we're going higher, right? So what is this daily candle going backwards for? It's going down or backwards because it's probably going to tap into something. So on the daily, you have to just look on that daily chart and say, well, oh, there's a daily order block down here. No wonder. When the daily chart finally hits that daily order block, guess what? Maybe you start looking for calls. I don't know. Use one of your entry strategies and look for calls because the monthly already told you that the monthly objective is to get there. So it doesn't mean you're going to be a straight shot. Price never goes in one straight direction. You're going to have retracements. You just have to figure out what we're retracing for. So figuring out those, what I call tools, other smart money traders call PD arrays and whatever you want to call it, points of interest, all of that stuff, figuring out the proper tools is your objective? And learning that, I mean, that's what I teach in my mentorship, knowing what price tends to retrace for to deliver us to those targets. That's one of the things I teach in my mentorship. So here we are with the weekly. So the monthly didn't tell me too much on PayPal though. So when I don't get nothing from the monthly, I tend to now come down to the weekly, because as you can see, the monthlies in consolidation, we're not really going higher or lower off of anything. Like we didn't tap into a order block and then go lower or something, you know what I mean? So there's nothing really telling me anything. I could say I don't like this move down. This is an ugly move down. So I know at some point PayPal's gonna make a nice move out of this. Will it happen this week? Probably not. But I know at some point we're gonna make a move up, because price don't drop like this. When price drop like this, it's like brace for impact. At some point we're gonna make a hard move to the upside. This is not a true drop. So you just look for signs for that time period. Now the way that price is running up here, I don't like this either, which is indicative of consolidation. So when I look at both sides of the market, I look at bulls, I look at their perspective, and I look at bears' perspective, and I say, hold on, both people are not really, like, the delivery on both sides is not favorable. I tend to stay away from that because there's tickers out there where the delivery is favorable on one side and you can make easy trades. So I wouldn't force the issue in here, just even based on what I'm seeing here. You know what I mean? For example, you've seen this red bearish for value gap. See this red one, right? There we go lower off of it. No. Okay, bet. Just checking. Look at this green. Nah, I ain't gonna talk about that. I ain't gonna talk about that. But let's see this one now. So then we continue higher, but it's ugly, it's choppy. Now we have this one. We just created one last week. Now we got another bullshit value gap. Copy. To be honest, I think this is low probability just based on the condition we're in. So I personally would stay away from this. If I don't get a weekly or a monthly like bias, I don't even want to be looking at the daily for real necessarily, because I feel like everything becomes just lower probability. Like I don't like what I see on highest time frame. And so I'll probably stay away from PayPal personally. But
Right? Yeah, you didn't like it? Oh yeah, it had avocado. She doesn't do avocado.
Had a meal a month for. So here we are. On a daily time frame though, right? On a daily time frame, if we bullish on PayPal, like, because we just started a nice little daily uptrend. I ain't gonna lie, this is nice. If we're truly bullish right now, then we will use this exact area that we're in for a bounce. And your easiest draw for you is to simply go back to the high that it came from. So if PayPal is bullish, based on the fact that we're in here, if I see inside of this area hourly bullish fair value gaps start to come out of here, then I might start to get involved and target these hourly highs. All right, so I would want to see price prove itself though, right? I'm not entering just because we in a POI. This is a daily bullish POI. I'm not gonna enter just because we in there. I need price to prove itself first, especially with the condition of the stock market the past couple months. So let price prove itself first before you get involved. But if we lose this area, meaning if we don't use this to go higher, then I would have price coming into this bullish fair value gap would be the next draw for me. I don't think we would use this red candle for higher. I'll keep my eye on it, but I don't think we came so close to this target. I guess it's a chance we could use this red candle for higher, but I'm not a fan of it. I would feel like we would draw into, oh, but that's overlapping. Is that overlapping this weekly joint? Hold on. No, it's not. It's right under it, I think. If I'm looking at it right, it's right under it. So yeah, I would think we would actually end up coming into this area first before maybe going back higher. So we'll see. We'll see. Let the lower time frames tell you. But it's not my favorite chart. I would stay away personally. Amazon is another one in consolidation. I personally would stay away from Amazon. So I'm not even gonna go there. Amazon is in a ridiculous consolidation. I already was looking at it. It's in seek and destroy conditions, or in other words, higher time frame chop. Amazon, if you're not already in a play on Amazon, I wouldn't enter a play on Amazon right now. Carnival Cruise Lines, Etsy. Let me go to Etsy first, and then I'm going to Carnival Cruise Lines, because I think Etsy I already had looked at that earlier. So, and I'm going to Carnival right after. Yeah, Etsy, I don't like if we were bearish on Etsy, I would have wanted us to go under these lows immediately, right? So if you peep this, see how we came to these lows and then we played around with it, then we popped out and we consolidate right here. That's not usually a good sign, but at the same time, we're not creating any bullish fair value gaps. So I would want price to figure this range out first before I get involved on Etsy. Figure this range out first. Don't get chopped up in here. You know, because if you went bullish, let's say you say, yo, because I don't trade support and resistance, but let's say you're a support trader. You're like, oh, let's take calls. All right, cool. Price went higher. Guess what? It came right back down. And then what? Price went back bullish. And then guess what? It came right back down. No, who's winning right now? Who's winning? Who's winning? So the weekly is, you can kind of see red, green, red. It's let price figure itself out. The best trades will come outside of this range. So what I'll do is I will map out the high and the low of this red candle, especially because right now we're on the inside weak candle. So I would map out the high and low of this candle and take trades outside of that. If we come above here, we should target these highs. If we come below this yellow line, then we should, in my opinion, start targeting these lows. So let price figure itself out first and then get involved. Otherwise, whether it's data or just bad entries may kill you inside of this range because it's not optimal for entries yet, in my opinion. And I'm going to CCL. I'm not going to do too many more because I don't want to speak too long, but I'm going to keep this going for now. Yes, CCL, man. See what CCL. Okay, so here, Carnival Cruise Lines is, I think Carnival Cruise Lines will drill higher personally. I don't think this was a real top. I remember looking at this. I don't think it's a real top. I think we're going to end up drawing back over these highs. If we come back under this monthly, or even this monthly low from February, right? The low of February, if we come back under there, then I would target lower. But right now, the monthly tells me to target higher on Carnival Cruise Lines. That's what the monthly is telling me at this exact moment. The weekly, we've seen a little bit of a push up out of it. I would like the push to be a little bit more aggressive, but regardless, this ain't what a downtrend looks like to me. I don't like this. If we were truly bearish, it typically wouldn't look like this. It wouldn't look like that necessarily. So here I am looking for a bullish draw. I'm looking for a bullish action. I will want this area right here. I will want this to hold right here. This VI, I will want this to hold for higher prices to run back, to really run out this whole area for right in front. To kind of make a move higher, I want price to use this. If it doesn't use this, definitely draw it into this green candle. So you have this whole inefficiency now. And I will watch just the upper half of this. So if you don't know what I'm talking about, I got y'all. I would say Carnival Cruise Line should be, if it doesn't use this upper half, then it's going to end up going much lower, right? So what you could say to yourself is, if you look at this red high, if we come under this red high right here at about 1660, if we start closing, if I get daily closures under there, then I would start to think Carnival Cruise Lines might make a move just into these lows. Then again, you could validate this as a OB2. Actually, nah. Now let's play it safe. Forget what I said. I'm gonna play it safe. Obviously, I'm looking at this live, so I'm talking my thoughts out loud. Let's play it safe. I would only go bearish for Carnival Cruise Lines if it loses 1609. That's the only time I'm going bearish on them. Because I just like, when I looked at it again, I see a bull case in here, just like I see a bull case up here. So how do I know when to actually take calls? Once again, let price prove itself. So based on the fact that this whole overall area price could go higher from it, I always see a bull case inside of this area. So if we lose the top part of it and we get to the bottom part of it, guess what? I have another bull case there, because I would call this a bullish OB personally. So I see another bull case. So what would I need? I need the lower time frame to tell me price is actually using it to go higher. So based on the fact that we have a lot more upside, right? You have some nice targets to the upside. You can be patient on your entries. You can let let's say we trade down a little bit. You can let a bullish fair value gap come out of here first to tell you, hey, that's real volume. I don't use indicators. So people look at volume. I don't look at volume. I don't need that at all. Fair value gaps is the best volume indicator in the market. So once I see fair value gaps come out of this area on the 4 hour, I can say, okay, Carnival is about to use this area to go higher. Then I could start looking to get involved. But so I'm gonna let price prove itself to me before getting involved in Carnival. That's how I see that. All right, now let me see what the chat is saying. Okay. When you're making, let me go to this question real quick. When you're making risky plays on long-term shares for Meta and Bitcoin, can you walk us through your thought process? I fear not being able to get back in and price leaving. But at the same time, I want to capitalize on those risky plays for long-term shares as well. See, long-term on Bitcoin or even Meta or anything to be talking about, I wouldn't even treat it like that. So I was open last week about this for Bitcoin. Last week, I was open how I sold right up here at the top. And then, so when price dropped down, and my fault, I sold my swings, not everything I ever owned, right? I'm just selling, I have swing positions on crypto. So I'm selling up here at the top. And guess what? During this green candle FMC, I got back involved. So I sold it up here, I got back in lower. That was risky. And I told y'all that last week. That was greedy because I really could have just held through the retracement. But the thing is, there was definitely a chance that Bitcoin could have made a much deeper retracement than this. So I got in. I mean, I sold, first of all, you know, for this swing trade, got in down here. Like, this is all documented. It's all on my Instagram and everything when I was saying Bitcoin's going to go bullish out of here. So coming from Bitcoin out of here and catching this whole move, yeah. And then selling right at the top, that's great precision, to be honest. That's good. But then getting back in down here, hey, hopefully we go back to the upside now, right? That would be great. But I'm also open to Bitcoin trading back down because look how we're bouncing. What kind of bounce is this? We went up and then we came back down. Now we're going back up. Do you guys see a pattern in the market right now? The entire, from the stock market, like financial futures, everything right now is in a consolidation, and it's making it hard to base intermediate term analysis on it because everybody is moving sideways. So if you're a long-term investor in Bitcoin or Meta, whatever you in, Nvidia, I don't think you should do trades like this. This was the reason I did this is because I was swing trading some Bitcoin. So that's why I say I'm gonna take my profits and I'm gonna get back in lower once price is ready to go back up. Caught this nice green candle, and then this happened this past weekend, past few days. So it might go back down, y'all. You know what I mean? It's going sideways. We have to see what comes next. So I wouldn't even say to handle it like that, to be honest. Long term, hold that thing, and then let higher time frames tell you it's time to get out. So if I'm long term, first of all, if I'm long term, I'm not selling really, period, unless it's coming back to my break even price. Then I'm gonna stop at break even, and then I'm gonna get back in lower. But long term, let Bitcoin like go bearish on a monthly at least. Like, it's bullish on a monthly right now, so let that thing ride. And for those who do market structure with change of character and break of structure, I'm not talking about that. I don't even care about that. I don't trade change of character, break of structure, market structure. That has nothing to do with what I do. It was a foundation for me though, yes, but it has nothing to do with what I do now. And so I'm not talking about that. Bitcoin is bullish, regardless of the external structure. I'm not talking about that. Bitcoin is bullish right now on the monthly for the real structure, the real type of market structure. So we gonna see what come next. So yeah, entry on break structure, Bitcoin looking good. Okay, cool. So I answered those, and I mean, yeah, I think I'm okay. I'll do one more. I'll do Nvidia. Spada and post my y'all in my mentorship so I can get with y'all after you know what I'm saying, after the Zoom. But I'm gonna go to Rush real quick, you know, the mentorship. Plus, I feel like Nvidia is more of a popular ticket, so people probably will want to see that more than the ones that y'all mentioned. So let's go to Nvidia, and that's the last one I'll do right quick. Let's talk Nvidia right quickly. Man, and man, look at this, y'all. This is what I'm talking about. Look at the whole market. Just be careful in ranges, man. Nothing is high probability in here. It was so frustrating looking at my tickets today. I'm like, bro, what are we doing? Sometimes it's time you just gotta kind of let the market settle it. So I was teaching some stuff in here. That's those markups. So, all right. I mean, the weekly we know is, but I don't even have to look at the monthly. Everything bullish. We know what Nvidia is doing. You really just come back to the daily at this point, or the video, and just kind of. I think the best trades will come outside of this range. Same thing I said. Because look at people who try to swing trade or day trade in here. It's not much to be done, right? You're probably getting killed. So let price figure this range out. Best trades will come on the upside here, on the higher side of this range, or once we lose the downside, then you're gonna have some nice trades coming out of that. So honestly, I would tell a person to stay away from Nvidia in here. That's my honest advice. Hey, this is not financial advice. Hold on. Where my lawyer at? It's not financial advice. But what I would do, I wouldn't get involved in this. And I really am about protecting capital. I try to teach good habits. I try to teach profitable habits, because you can be risky and say, I think it's going up, so we going up. Like, hold on. What do you think is going up based on? Because there is no real, outside of the fact that we're in an uptrend, of course, but we're chopping now. So we can enter a bit of a reversal stage. Doesn't mean we're not still in the uptrend. Let's be real, right? We could reverse into this area right here and then go up. So it's like, how do you know we are about to make that type of move? Or how do you know we're just going to simply continue higher right now? You don't know what it's about to do, because there is no point of interest for you to necessarily base an analysis on. And so let price figure itself out. And I want you to protect capital in these conditions, y'all. If you see another ticker that's making strong moves, get involved in that. Like, man, I'm just trying to find anything, bro. I don't know. Like, let's say you was looking at Neo. Neo's making strong moves to the downside, so you could have gotten involved on something like this instead of trading a ticker like Nvidia going sideways because it's popular. Like, don't worry about popularity. If Neo makes this move and you got him from the top, guess what? You made a 500% play. Just like, so you could make a 500% play on Nvidia and Neo. Guess what? They both pay you the same amount of money. Because if you typically put 1,000 into your Nvidia play, why don't you just buy $1,000 worth of Neo contracts? Neo has a better setup. So Neo's gonna let you make, 500% on $1,000. Just like Nvidia could have done that same thing with one contract. It's the same thing. Y'all trade probable charts. Don't trade popular names. Trade probable charts, not popular names. Okay. So that's all I really want to say in this Watchlist, y'all. If you watch this on YouTube, definitely like the video. Definitely subscribe to the channel, because we've been doing this every week. That's all she wrote.